Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. Imagine a company that has shattered market expectations. Its profit have risen 210% in the last 90 days. The earnings have doubled and the balance sheet is so clean, it is 97% debt free. I'm not talking about any Silicon Valley startup. I'm talking about Force Motors, the dark horse in the Indian auto sector. It has outmaneuvered industry giants in the most brutal market conditions. While the rivals struggled, Force Motors has engineered a financial masterclass. Now it turned 395 crores in strategic government initiatives into rocket fuel for growth, slashed debt from 522 crores to just 17 crores, a 97% reduction in the last 12 months, delivered shareholder returns that crushed the Nifty Auto Index. But here's the real shocker. Even without one time gains, their core profits still grew 27% year on year basis, proving this isn't just accounting magic. Their stock surged 107% in the last 3 years while dominating commercial vehicles, the industry's toughest segment. What does the CEO Prasann Firodia has to say about this? Well, he says this is not peak performance, but this is their new baseline. Ready to discover how a 66-year-old company became India's most surprising growth stock? Well, we are breaking down every explosive details and revealing whether this rally has just begun. Force Motors has reported exceptional financial performance in Q4 financial year 2025. The full fiscal year performance also demonstrates remarkable growth amidst challenging market conditions. Now, in this analysis today, what we'll do is we'll examine its financial performance, operational efficiencies, position, and future outlook. In quarter 4 of financial year 2025, the company's net profit surged 210% year on year to reach 434 crore rupees compared to 140 crores in quarter 4 of financial year 2024. Now, this extraordinary profit growth was supported by revenue from operations, which increased by 17.4% to reach 2,356 crore rupees. EBITDA rose by 18.2% to 329 crores. Margins improved 14%, up from 13.9% a year back. Now, earnings per share jumped to 329 rupees per share, up from 106 rupees for the same quarter last year. Now, it is noteworthy to focus our attention as to why there was this exceptional profit performance in this particular quarter. Now, it is due to a one time income of approximately 395 crore rupees from government incentives under the various schemes encouraging local domestic manufacturing. However, it's worth noting that even without this exceptional item, the company's profit before tax grew by a healthy 27.5% year on year basis to reach 273 crores, indicating strong underlying operational performance efficiencies. Checking the full year's performance, Force Motors has reported consistent growth. Annual revenue reached 8,071 crore rupees, marking a 15.44% increase year on year basis. Net profit more than doubled, growing 106% to 800 crores compared to 388 crores a year back. EBITDA margins also improved to 13.54% from 12.8% year on year basis. Earnings per share for the full year stood at 607 rupees compared to 294 for the same period last year. Now, the board has recommended dividend of 40 rupees for 100% for financial year 2025, doubling from 20 per share last year. Right, this reflects management's confidence in the company's financial health and future prospects. Now, the company has significantly improved its financial strength. Let us look at the financial health of the company as well as its balance sheet strength. The company is almost debt free. It has reduced its borrowings to just 17 crore rupees for the financial year ended 2025, down from 524 crore rupees last year. Finance costs decreased by 49% year on year basis to 7.26 crores in the quarter 4 of financial year 2025. Now, this demonstrates effective cash flow management. Cash flow from operations remained robust at 971 crores in financial year 2025. Total reserves increased to 3090 crores, up from 2312 crores in the previous year. The company has maintained efficient working capital management with cash conversion cycle of 32 days in financial year 2025, slightly higher than 27 days in the previous year, but still indicating good operational efficiency on part of management. Checking some of the key profitability matrix, now the return on capital employed increased to 29.8% in this financial year, up from 24% in financial year 2024. Return on equity improved to 20.7%, indicating efficient use of shareholder funds. Now, the company has maintained a 5 year profit growth CAGR of 46%, which demonstrate consistent performance improvement. Now, looking at the operational efficiencies of the company, the debtor days, the time the company takes to collect from its customers, decreased to 8%, 8 days in financial year 2025 from 14 days in the previous year. Now, this suggests increased operational efficiency on part of the management. Inventory days were maintained at 73%, showing consistent inventory management. The overall working capital cycle remained well controlled at 16 days. What is the business model of Force Motors? Well, the company is engaged in manufacturing LCVs, light commercial vehicles, small commercial vehicles, utility vehicles, and engines. The company has established itself as a significant player in the commercial vehicle segment, with approximately 56% of its revenue coming from commercial vehicle sales. In the domestic market, the company sold 3,606 units of commercial vehicles, light commercial vehicles, utility, and SUVs in March 2025. It registered a rise of 11.02% year on year basis. The growth is particularly noteworthy considering that according to the FADA data, the overall commercial vehicle segment in India remained nearly flat at minus 0.17% growth in the financial year 2025. So, despite the entire segment showing below zero growth, a negative growth, Force Motors has shown a remarkable 11% growth in this particular segment. It is important to note here that the company has discontinued its tractor business as of 31st March 2024 to focus its attention on commercial vehicles. Now, comparing the performance of Force Motors with the broader industry, with the broader automotive market, the revenue for Force Motors grew by 15.44% in financial year 2025, which was significantly higher when compared to the industry overall growth of 6.46%. A company's passenger vehicle business outperformed industry's growth rate of 4.87% as well. But while exports declined by 77% to just 94 units in March 2025 from 420 units in the same period, March 2024, strong domestic performance more than compensated for this decline. Currently, the stock is trading around 10,000 levels, and the key valuation matrix suggests that the market capitalization of the company is around 13,250 crore rupees. Price to earning ratio is at 24.2. Book value per share is at 2,302 rupees. Dividend yield is 20%. The company has delivered an impressive long term return to its shareholders. 10-year stock price CAGR is at 20%. 5 years it is at 65%, and for 1 year it stands at 6%. Let us look at the strengths of the company. Well, it has reported impressive profitability growth with 5 year CAGR growth rate of 46.6%. The company is practically debt free, which provides financial flexibility for expansion and reduced interest cost burden. The company maintains a healthy cash conversion cycle and working capital days cycle as well. Both ROCE and ROE have improved significantly, indicating better capital utilization. The doubling of dividend from 20% to 40% reflects management confidence in the future performance of the company. Now, on the flip side, what are the challenges that the company may face? Well, one cannot ignore that the quarter four performance, the exceptional profit performance in quarter four, was a result of a one time income of 395 crore rupees, which the company received from the government. Secondly, there was a sharp decline in exports. I have already told you that 77% decline in exports in March 2025. Now, this needs immediate management attention. Thirdly, its reliance on one particular sector, that is commercial vehicles. Now, 56% of its revenue is generated from this sector, and which makes it prone to cyclicality of that particular sector. The company's current PE is at 24.2, which is relatively high as compared to historical averages, which reflects exceptional profit growth of the company. Now, to conclude, Force Motors has reported exceptional Q4 performance and has shown significant improvement in its profitability, operational efficiencies, as well as revenue generation. Its near debt free status and improved return ratios all suggests a robust financial health of the company. One cannot still ignore the sharp reduction in exports as well as the one time income that the company has received in quarter 4 while making an assessment of this particular stock. What do you think of this company? Do you think it is a company for long term investment? What are your thoughts? Please let me know in the comment section. Also, this video was for educational purposes and is not a stock recommendation advice. It is always advisable that you approach a financial expert to seek the correct investment decisions for your needs. If you have liked this analysis, please like, share, and subscribe to our channel for more such informative content. Until next time, stay safe and goodbye.